This is the Investor Connect podcast program. I'm Hall T. Martin. I'm the host of this show in which we interview angel investors, venture capital, family offices, private equity, and many other investors for early stage and growth companies. I hope you enjoy this episode. Interested in learning more about investing in startups, launching a new startup and need to raise funding? The Startup Funding Espresso is a daily podcast in a short, concise format delivered to your inbox every day, Monday through Friday. In the time it takes to drink an espresso, you can learn about startup funding. To subscribe, go to investorconnect.org and put your email into the pop-up box. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Bob Norton, CEO at AirTight Management. AirTight Management prepares and assists entrepreneurs in launching new companies and products, scale through consulting and training and coaching to create high-performance cultures. Bob, thank you for joining us.
Thank you for having me. I'm excited to explore the topic we agreed on.
Great. So can you tell us about your background? What did you do before working with early stage companies?
Yeah, well, the short version, because I've got a 40-year career, is I had 8 years as a technologist. I was a software engineer and then VP of engineering and chief technical officer for what today is Thomson Reuters, information services and software and database company for the financial services market. And I ran the skunk works there and created a lot of products. So that's kind of how I learned to create products, to have good product market fit. You know, I was charged with creating a new product every year, and every one of those became a new business. After that was sold to the International Thomson Organization, I founded my own first company with the money I made there and kind of bought myself the CEO seat. That was back in 1989. I started the first high definition residential real estate company called HomeView, which was a couple of generations ahead of anything else back when there were little black and white photos at MLS books. And I grew that to $156 million in revenues in 5 years, got a $34 million financing from IBM. And I, we don't have the time to go into all the other details, but since 2004, after having grown two businesses to 100 million from startup, I've been coaching and consulting and being a board of advisor and board of director for early stage companies, really specializing in entrepreneurship and scaling. I've produced 350 some odd training videos for entrepreneurs and CEOs in the brand, the CEO Boot Camp. And AirTight Management is more about scaling and, kind of a do it with you to implement a modular operating system and help companies build the infrastructure to scale before they do it, so the wheels don't fall off the wagon as they go faster and faster down the highway.
Great. So what excites you right now?
Oh, gosh, I'm a very curious person and love to be learning new things. So I think there's a lot of exciting stuff going on out there. I think that the crowdfunding space is exciting and will give access to more entrepreneurs of early stage capital. What's happening with blockchain and the cryptocurrency markets is very exciting. I think it's getting easier to get capital. And in fact, the valuations have gone up some. Which is helpful to entrepreneurs, but of course not as helpful to investors in terms of making sure they're picking good companies and stuff like that. But yeah, I keep busy, and I'm running 3 different companies right now. So I guess I'm always excited about something, if not multiple things, and running as fast as I can.
Well, great. Well, I'm excited about today's topic, which is how to create sustainable competitive advantage. And I remember many years ago, every slide deck, every pitch I saw had a competitive advantage and had a competition matrix in it. Everything did, because you had to know who the competition was and how you were better. And I really don't see that much anymore. And I think it's something we should bring back, which is really a knowledge of the competitive matrix. And I had a startup ask me the other day, I'm trying to show my market and so forth. And I got the market slide and I said, well, you don't show who you're selling to and what your market niche is with the market slide. That's just trying to tell people you're big or where you're going to start. Your competition slide tells you what market you're after and where you're going to position yourself. And he had to go put a competition slide in because he did not have one. Tell us more about sustainable competition and what's your take on it?
Well, yeah, I think what you're talking about is sort of a Michael Porter, who's the father of competitive strategy, competitive landscape map, which tries to show some of the differentiations to make visual the white space and how you're differentiated in the marketplace. And there can be multiple views of that because there are many dimensions to any given company, with the basic one being price and value, or, it can be speed and any other dimension that's important to the customer that the customer knows. And yeah, I mean, I think I was the first one that did that when I entered the market, because I was a big fan of Michael Porter and showing that. But I would differentiate that from sustainable competitive advantage. And so let me define that, because, with the media kind of blurring the terms, and not a lot of experts that have done this multiple times to kind of talk about it, I think you've got to get real specific about those terms. So a competitive landscape map is sort of a two-dimensional, or it might try to use three dimensions by having size of bubbles or whatever. And it shows the differentiation at a point in time, typically at market entry, right? A sustainable competitive advantage is sort of a derivative of that, because it's the time series of that and how you're going to take steps to maintain competitive advantage over time, which is likely to evolve, as well as your target market is likely to evolve. You may have a portfolio of products, or you may have a portfolio of niches you're selling the same product to, and you're probably expanding your market, because if you're an early stage market entry, you don't want to be going after a large market. You want to be going after a niche of very well-defined customers, because it, reduces your marketing cost and increases your sales close rate and all those good things that differentiation does when you're not in a bake-off against 20 other competitors. And you can say, hey, we're the go-to guy or gal for that particular space or solution. And so a competitive landscape map shows that snapshot of your differentiation on one or more dimensions. And there can be 6 or 7 different dimensions. So there's always hundreds, if not thousands, of potential niches you can carve out and decide to be a market entry strategy. But sustainable competitive advantage is kind of what's in the background. It's how are we going to stay the best in the world at what our long-term mission is? And probably everyone who's an entrepreneur has heard the Simon Sinek why thing, and also Michael Porter's great book, Good to Great, that talks about the hedgehog concept. And all of these three things are kind of a Venn diagram with 3 circles that overlaps, that share some things in common, but are really different. And I would say that Jim Collins's hedgehog concept is where you're going to invest to be the best in the world, to stay ahead of the competition. And if you looked at Jeff Bezos and Amazon, he's on record saying, I'll always invest in speed, more variety, speed of delivery, more variety, and giving a low cost to the customer. And we're always customer focused. So he knows no matter how many millions or hundreds of millions he puts into those things, no customer ever said, I want it slower at a higher price with less choice, right? So, he's very focused, and that's sort of his hedgehog concept, to expand from initially the market entry of books into, essentially, I think we're up to 200 million products or more on Amazon today. The Simon Sinek why is sort of what the employee is excited about to get out of bed every day and come into work and feel they're doing good. And they're not just working to make the CEO and the management team rich, but they're contributing and they feel like they're having value. The sustainable competitive advantage is in the background of all that. And it's what we're going to do to stay ahead of the competition with a series of barriers to entry that will evolve over time. And, having watched hundreds or thousands of these investor pitches, there's kind of a standard list of 8 or 10 deck slides nowadays that everyone knows, and you can Google and see what those are. But they often don't, and I don't think I've seen more than 5% of companies actually present their sustainable competitive advantage. And I wouldn't recommend people put this out there in an unsolicited deck that someone they don't know. I'd only show it to serious investors. But it's the evolution of the company. And, a good example of that might be Elon Musk and Tesla, because everyone sort of knows the history of that probably. He started with the Roadster, which was a $100,000 sports car, to prove that lithium batteries, because that was the enabling technology, could make a high performance vehicle that was electric, right? And he sold it for a very high premium price at a market entry. So that funded the R&D of getting those first batteries and factories done. And the second step, which I'm sure he knew was coming all along, was launching the Model S, which was a $60,000 luxury vehicle, right? So now he had built up a competitive advantage in manufacturing batteries and the software. He had the first software upgradable car, and there's all this stuff happening in the background, some of which we won't know and, would never be leaked to the public because they're trade secrets, and, some are patents that'll be in the public domain. And then ultimately he moved to the mass market vehicle, which was the Model D and the Model X for the SUV. And I'm sure he knew all of that would come over time. And technically, that's a multi-step market entry strategy that expands your business. But it's also building barriers to entry and expertise in the background. Now he has the gigafactory of batteries, which is a sustainable competitive advantage. He's probably getting locks on the supplies of lithium because that's a limited thing in its mind, and probably 20 or 30 other things. He's making the auto driving capability better and better. Supposedly, they're about to release that to be, totally autonomous driving and stuff like that. So those things that are embedded in the car are sort of his sustainable competitive advantage. And of course, the ultimate sustainable competitive advantage is having a culture of innovation. And to quote another great, in management, Peter Drucker, there are two jobs that a company has: marketing and innovation. And sort of everything else is more commodity and easier to do. But marketing innovation both require creativity and differentiation in the marketplace, and potentially thousands of ideas. There's this concept out there that people get rich off an idea, which is not true at all. It's never been true. I mean, a company takes hundreds, if not thousands of ideas to build it, even though there may be a core light bulb idea and moment. There's sort of no one that ever got rich off of an idea, and the proof of that is even if you have a patent, which is an exclusive on a way to do an idea, you're only going to get a 5% royalty on that patent, and 95% of the revenues are going to go to the people who build the company and do the marketing, sales, finance, product development, operations, customer service, and put in the capital and stuff like that. So it's very easy to see that a good entrepreneur and all of the people who have become billionaires understand this concept of building sustainable competitive advantage, so that each year they're staying ahead of the competition with more and more barriers to entry that give them, lower sales costs, lower marketing costs, higher close rates on every sale, and word of mouth marketing. You're gonna, the whole book, The Purple Cow, right? No one ever talks about something that isn't different or better in some way, right? And so if your product is good enough, your word of mouth marketing is going to be free, and you're not going to have to spend money, as Tesla doesn't spend any money on marketing, really. They know their product is unique, and it's always going to stay unique because they're constantly making it better every year. So that's a long answer. I better let you step in here.
No, that's great. Appreciate that. But you mentioned differentiation, and I hear that a lot. And what's the difference between differentiation and sustainable competitive advantage?
Yeah, well, I would define it as differentiation is the snapshot of now of how you're different and better, which should allow you to select your ideal customer and target that ideal customer very well to focus your marketing. Because in marketing, you want to hit, one person 11 times, not 11 people once, right? So the more you can focus your marketing, which is counterintuitive for some entrepreneurs, they want to think everyone needs their product, right? But in reality, you want a sizable niche that you're going after. But as a startup, you don't want to try to boil the ocean and go after the mass market. That's why the Elon Musk, Tesla example is great. They didn't launch a mass market, Model D or Model X car. as their first car. They built to that. And as a result, GM and Ford and others were sleeping, and they were building up expertise and IP and patents and the Gigafactory battery factory and all this other manufacturing expertise to sort of take all the best practices of startups in Silicon Valley and apply them to the auto industry, which had become kind of sleepy and complacent, even though it was beaten up by Japan in the 1980s,
Yeah, absolutely. So, creative, sustainable competitive advantage is really a must have. How do you actually build that?
Well, we have a whole hour lecture on that, and there are about 20 different techniques that we won't have the time to get into here, from the CEO bootcamp. But, the one that everyone knows is IP, right?
Right.
You can have copyrighted software or materials. You can have patents. You can have trade secrets. You can have trademarks. And so those are the four main categories of IP. And of course, trademarks help with your branding in the marketing. Copyrights have a 99-year life, whereas patents only have a 17-year life. So some balance in using both of those is one strong layer of sustainable competitive advantage. It's not sustainable forever, but it's sustainable for a very long time in a world where product life cycles and market cycles are getting shorter, every decade, right? Other things that are, sustainable competitive advantage, I'll try to list a bunch of them that I think that people will recognize. Let's talk about, for instance, some people call these barriers to entry, right? But, I've got a list of 11 ways to create sustainable advantage in front of me. And a culture of innovation is one. In other words, a dedicated set of people whose job it is to always be innovating and making the product better and having a budget for that, as opposed to being a sitting duck target. You're always moving and staying ahead of the competition. The four IP types that I mentioned, superior execution. If you have better execution through better processes or IT systems that facilitate those processes and help to add speed and lower costs, those can be hidden internal sustainable competitive advantages. If you look at a company like H&R Block, right? They got to come out of the woodwork and work like mad for 6 months a year, and they're kind of dormant a lot of the rest of the year, right? But they have all the systems to train the tax people, tax preparers, and enter everything into the system. And so their sustainable competitive advantage is a mass, of IT and customers. Network effects are a sustainable competitive advantage that protect Facebook and Instagram and LinkedIn and all of these online companies. Trying to get some lock on distribution or raw materials. Like Dole Pineapple, a commodity business, right? But they own all the pineapple fields. They've been buying them up for decades, if not a century, right? And so they have a lock on the distribution, even though that's a commodity. So in any business, no matter what industry you're in, there are ways to generate sustainable competitive advantage in every area of the business, in sales, in marketing, in finance, in product development, in pricing, in the innovation culture. You shouldn't be happy with having one of those. You should be looking for 4 or 5 ways to have those that is going to stretch the competition. And one of the things you see that is, provable by metrics is the price to earnings ratios can be 10 times higher with a company that has good, sustainable, competitive advantage, because that guarantees recurring revenue. And so the value and the valuation of your company, even at startup, if you're projecting what your sustainable competitive advantage is going to be, that's going to raise your valuation, because you're showing them, hey, this isn't about just the market entry for the next year or 2 or 3, but in year 4, we're going to have the next rocket that goes to Mars. And in year 5, we're going to have version 5 of the software that's going to do this. And we already know what that is. Of course, that's hush, trade secret and stealth mode. And you're not going to share that except with people that are under non-competes. But it's a plan to continue innovating. Critical mass of information. Another competitive advantage that Tesla has is they've been collecting billions of pictures from all their cars driving around to create the AI database that's used for the automatic driving. So they've got this huge database that no one else has that has allowed them to perfect or improve rapidly with, image recognition and AI, their self-driving stuff. And all of that is top secret and embedded in their software, and it's not anything anyone will see. So that's a great sustainable competitive advantage. And every Tesla that hits the road is basically collecting more pictures for them to make their auto driving better. And I'm sure they're obviously mapping the pictures into the GPS and the location, the direction the car is going. And so it's going to get better and better over time. Some other things that are competitive advantage, well, switching costs is, common technique they teach in school, right? If you can get your customer to think with your models and your processes, and software is a good example of this. We did this with, SaaS products long before the name SaaS existed back at Thomson Financial Services. We created the model of how our customers thought about things. And so when a competitor came and pitched them and showed them their software and it didn't conform to that model, it felt weird. It felt different. So the switching costs and the retraining of the employees was going to be an expensive thing if they were going to drop our product and move on to someone else's. So there are hundreds, if not thousands, of different ways to create sustainable competitive advantage. You might have heard of mindstorming, and it's one technique that I think all companies should use. Brainstorming is collaborative idea storming, right? But mindstorming is coming up with 20 answers to the same question so that you don't stop when you think about the first and you keep digging deeper and deeper. The theory being, well, your competitors stopped when they got the first 3. And if you went to 20, not only did you get 20 ways to compare and contrast, but the permutations of putting those 20 things together to create all kinds of different competitive advantage in different market segments, could create huge lead times where you're years and years, 5 years, or even a decade ahead of your competition, because you've thought through all the possibilities and you've designed version 1 to get to planned version 3. So you're not going to have to go and rewrite everything and change it and change the customer models and change your processes because you had a vision of where you were going.
So how do you apply this to service businesses? It seemed like there's some differences there that it might change the approach.
Yeah, for sure. I mean, service businesses are notoriously harder to have sustainable competitive advantage because if you look at someone like Century 21, right? They're in the business of training their competitors every day, right? The broker gets a license, spends a few years working for someone, gets a smaller percentage, then they move on to Remax, they become a big super broker, then they want to open their own brokerage office, right? Because people, if people are your only asset, they're walking out the door every day, as they say, right? And going down the elevator, and you have no hold over them. So in a service business, you've got to have processes that are proprietary. You want to try to have product and IT systems that facilitate those processes. It's possible you could have patents on processes, but a lot of these might be kept as trade secret. And, you're sort of creating silos of people that do one thing in the business as opposed to training everyone to do anything. Because as a business gets more complex, complexity becomes a huge barrier to entry, right? Because a newcomer in the market can't start off with all of that stuff figured out. And so it's a slightly harder problem, but it's definitely achievable to create many barriers to entry around service businesses too. Like I said, H&R Block and TurboTax, companies that have a mix of physical product like software to facilitate a service like tax preparing. They're going to have a sustainable competitive advantage because every year they're going to make that software better. They're going to have partnerships. They're going to have resellers and distribution. They're going to do all kinds of things to leverage the proprietary aspects of the business, which a straight service business can never have. The plumbing business will probably always be totally fragmented, right? Because any plumber can work out of their home and start a plumbing business, right? And there's no trade secrets. There's nothing proprietary there. So you've got to inject proprietary stuff, be it product or process or other things to build barriers to entry and sustainable competitive advantage around a service business.
So it sounds like you're doing this throughout the life of the company, from the early days of the startup to the mature phase of the company. How is it different between the early stage when there's just 3 people and limited resources versus the mature phase? How would you guide somebody to provide or work on sustainable competitive advantage for the very early stage? What should they focus on?
Well, it's really up to the founder, because strategy is, I always giggle when I see, ads on Upwork that, they want to hire someone to do a business plan for them and they're going to spend $1,000 on it. And it's kind of a badge of you are going to fail, because the founder isn't taking the responsibility of what CEOs must do, which is strategy and people hiring and figuring out the vision. And if you look at the super billionaires out there, all of them, Gates, Branson, Bezos, Musk, every one of them had a long-term vision. They didn't focus on, the next quarter, as sometimes our stock market and public companies make us do. They focused on achieving a long-term vision because they knew the world was moving in that direction, and they were working a little ahead of it. They weren't giving the market the product they needed today. They were building the product 18 months or 24 months or 36 months in advance, knowing that innovation requires iteration, and they'd have to change it and improve it and get customer feedback and go through multiple revisions.
Well, absolutely. I work with a lot of startups, and I find that many of them have vision. Unfortunately, they have what I call the vision problem. In other words, they want the grand vision, but they want it on version 1 of the product. And of course, that, the truly grand visions like Amazon and others, it was 20, 30 years before they got there. And that's what we have to explain to startups.
Yeah, trying to do too much will kill you too. The MVP. I'm a big believer in the MVP philosophy, and I've done it long before that book ever came out. That you got to get into the market and have customer feedback with a version 1, knowing that you're going to iterate and improve over years.
Absolutely. And consequently, they're asking me for $5 million at a pre-seed level to go build their first prototype, because it's got to be grand and glorious. And I'm talking them into, well, let's build the MVP for, say, $500K, and let's go out and win the business engagement and all that. And we'll work our way up to the $5 million solution.
Yeah, bootstrapping is an important discipline, because too much money is a problem, and we saw a lot of that in the internet bubble. And venture capitalists dumped $20 million on, some VP out of Sun Microsystems, who went and built this huge infrastructure. And, so they tried to create a baby with 9 women in 1 month. And there was no discipline around talking to the customer and feedback and listening to the marketplace and getting your product market fit right. They just built in what they thought the first product vision was. And it's almost never perfect, right? That's never right. You're always going to have some pivots, whether they're small or large, as you get reaction from the customer base and the different markets that you might try. You've got to be agile and have multiple market entry strategies, ideally, and make sure you're building the product to work in multiple marketplaces, even though you're optimizing it on day 1 as the first market entry strategy for a particular ideal customer and niche or vertical market.
Great. Well, what are your thoughts on sustainable competitive advantage, and how a company can ensure it has enough of that to attract capital and top people?
Well, I'm really big on having a financial plan that maps into milestones, which shows the vision. And, you kind of can't do that without defining how are we going to evolve and get better and build sustainable competitive advantage, right? Because you ought to be saying, okay, the first $1 million is going to do this, and this is the milestones, and here's the things we're going to prove. Maybe it's the economics of capturing customers, your customer acquisition cost. Maybe it's, other things, right? But you've got to have that step-by-step process that you can sell to investors that is going to lower the risks, because obviously each step down in risk is a step up in valuation, right? And you don't want to raise a lot of money until you've got that valuation up. So I'm a believer everyone should bootstrap and put in some of their own money and friends and family money, as venture capitalists like to see generally, because then you can get traction without having clouded up your capital table, and you're focused not on raising capital and keeping investors happy, but on the customer in the early days, because that's where the challenge is making sure you've got a great product that fits in a market, and hopefully an idea of a series of other markets that will open up when you're ready to address them with the same product. So you've built a product for many markets, but you've narrowed it, and you've added bells and whistles probably for a particular marketplace for your very narrow market entry strategy. So you're not fighting 800-pound gorillas in a huge market.
That's great. So in the last few minutes that we have here, what else should we cover that we haven't?
Well, I would like to point out that the economics of this you can actually prove by looking at the price to earnings ratios of companies. The ones with strong IP, I've got some in front of me, and you see price to earnings multiples of 99 and 120 and even 300 sometimes, when it's clear that that company has proprietary product and sustainable competitive advantage, right? So all of this maps in, and nothing but good comes out of it, because not only are your sales and marketing costs lower, but you get more recurring revenue, you get more word of mouth. And so a focus on sustainable competitive advantage and how you present that and evolve it over time, to me, is the biggest and best question that a sophisticated investor can ask. It's not what's your product going to be on day one, is what's it going to be year one, year two, year three, and how are we going to expand the market and remain ahead of the competition? Because if you've got that planned and you've got that baked into all your plans and your designs and your processes, you could be years ahead of the competition and maintain that lead.
Well, great. So for those who want to learn more, how best for listeners to get back in touch with you?
We have many websites, but ceobootcamp.us is a good one. That's where we have our training program for CEOs, and that's actually going to be expanded in the fall to Entrepreneurship University, which is breaking all of the 40 different courses we have down individually. So managers and VPs can take portions of the CEO bootcamp that are appropriate for their discipline. So that the URL entrepreneurshipu.com is also working and will become a new site fairly shortly as we sort of unbundle the CEO bootcamp into many different courses. We also have a phone number is 619-SCALE-06. And that's based on the 6 systems in AirTight Management that you drop in at certain stages of development to be prepared to scale.
Great. Well, we'll include those in the show notes. I want to thank you for joining us today and hope to have you back for a follow-up soon.
Great. Thank you, Hall. It's a pleasure.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Hall T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.